Good afternoon,
Done.
Sarappreet. How are you?
I'm done.
Very good. Excellent. Fantastic. All right. As we always say, that you need to ask questions to get started so that your questions get the priority number one. And we got many such questions, and I'll be responding to each one of your questions. The first questions came from Gautam, and then Dhanuka, and then Vijeta. You can ask any questions during the 2 hour session, stopping me or stopping Marty when he is speaking. And we'll definitely try our best to share our experience so that we can resolve your query with the best of our knowledge. The first one will be starting with Gautam's question, as you can see in front of you. He has asked 3 good questions. The first question is, explain rule of 4 with 2 examples in recent trades. All right. So first question is, explain rule of 4 with 2 examples in recent trades, which I'll go through that. So we have a tremendous proprietary rule of 4, and I'm glad that Gautam has asked these questions with 2 examples in recent trades. So I'll go with that first question, rule of 4. All right. So this is in front of us is Euro USD in our daily or 48 hours template. And let me go through, because I'm answering rule of 4, so I'll maximize this question. And rule of 4 states that if we are going to go up or down, because no one knows the right hand side, so we don't know the right hand side. So what we'll do, and I told you the dates from 1 to 5 on the 1 to 5 on the monthly, and Monday on the weekly are good time frames to look for opportunity to trade. So this is the 2nd May, and now we are in 2nd June, which is Sunday. So 2nd May was the start of the month, Thursday, and this bar has actually started to follow the rule of 4. Any one of you can remind me what it has done, this bar on the 2nd May, the last bar? You can unmute and talk.
Yes, Partha. I mean, I asked question, but I mean, I'll answer that probably. I just wanted to make sure that
Go.
my belief is correct. That's why I asked this question. So the first is like, that's the line, which is the monthly pivot.
Yeah.
Preferably bullish bar. So that is also true.
Yeah.
And it has closed above the line as well. And the 4th criteria would be the next bar should take the high of that bar. That would make us go for long, right?
You got 100 out of 100. And that was Gautam answering all the 4 points. So the high is 107.31, 30.30, that means 30, 107.30. Add 10 or 15 as per your risk appetite. So we'll be entering at 137.45. 45 at around this point, to go long. There is a crack and snapback can also happen, but let's see what happened. As Gautam said, we'll be entering around 45 here. So this bar has crossed 47. So we are in the trade now. We are in the trade, and our stop loss would be according to our rule, and it'd be here, because we have a very fixed rule to entry, fixed rule for the stop loss, but we have variable rules to maximize our profit and exit from the trade. So in this trade in front of you, what we have done from 45 roughly, we have taken a 80 points of risk with a possible first target of this, which is 53, which is 0.7, not bad, and next target here, which is which is 101, which is 1.2%, which is 1.2%. So let's see. We have taken the trade with a rule of 4, and I'll go and show you the strategy also. So this has crossed our target here, which was 100 per 116, which with 1.08%. So we met the target, but we will not close the trade here. Good afternoon, Danuka. How are you? So we will not close the trade here because we'll again wait for the rule of 4 here. And let's see what happened to that trade. Yeah, so this could have been a rule of 4 to the downside. And again, if you can remind me what happened here to close the trade, if anything or not. Anyone, including Gautam.
In this, can we see that like from the bigger bar, it's lower is not taken out yet?
Yep, 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 yep. Next. Yeah, very good. Uh, Girija is talking about this one, big bar low. Big bar low is not taken out. Yeah. We also have a concept of big bar midpoint. Yeah. So big bar midpoint as well as the big bar low has to be taken out. So it has to close below with the touch close below. And this is a monthly pivot. Monthly pivot. So previous month, and this is a pivot line again. So we have touched the line, close below, preferably bearish bar, and low to be taken out by 20 points for us to close the trade. So in that case, it is the low in this case is 108 20 36 minus 10 26. So 26 will be out, and we have entered at 45. So if we are exiting at 26, so we have taken a risk of 80 points. So we'll be exiting at 84, which is 1%. Which is 1%. This is just to, and this fellow did not. This fellow did not take the low by 10 points. So we are still in the trade. So we'll move this one. We'll move this one. Good afternoon, Linda. How are you? And then we'll be eyeing for either to have a double top here, either a double top here at around this point. So let me draw that line. So this is the recent resistance here. The dynamic support and resistances are all dynamic. So we are holding onto the trade with, and again price is playing between these two. Now we are out because the rule of 4 here has actually met all our criteria to get out. So we, in this trade alone, we have taken a 80 points stop loss for a profit of 83 points, which is not bad, 1%. So that is one question, one answer to the question which Gautam has asked. And in addition to that question, let us see at this moment what are the other opportunity which were generated from our standard strategy, which is shared with all of you. So this is the first standard standard sample setup, number one. And this is, we cannot take this one because if we have taken this one, then this trade is running at a loss, so we cannot take this one. We can definitely take this one. So second trade we can definitely trade. That is why it is written second trade here, because this trade is now running at a profit. If you want, you can close the trade here as per the one of our exit rule. Again, we have a extremely good hook entry here and a normal entry here. Again, we cannot take this hook entry because this normal entry is running at a loss. This normal entry running at a loss. We will not take this one because of the reward to risk ratio. So this is one of the this is one of the currency pair in front of you, which has followed the rule of 4 to go long and give us more than 1% along with this strategy. So Gautam has asked me to show you another one. So let me take this opportunity to go to another currency pairs, which may be, let us go to our own Aussie dollar and let's see what happened there. So just to answer his question, I'll maximize the price and do the same thing here with the rule of 4. And the starting date preferably would be 1 to 5, and then again 11 to 13, and 21 to 23. So this fellow, as per my understanding, even this small one, let me hide this one. Even this small one with a monthly middle S1 support quarterly mid S1 support here has done two things. One thing I'll give already Gautam has said, and that is the question we are discussing. The other thing already also happened. So can you tell me both the things which we are seeing here? Anyone, including Gautam, who has asked the question.
It's an all sellers out bar. The red bar.
Fantastic, brilliant, excellent, very good. Again, 100 out of 100. So the first point here we saw a all sellers out. Very good, excellent. Anything else? Anyone? All of you know everything. Just you need to unmute your mic and say hello.
You got a Harami there.
Crack and snap back. Brilliant, excellent, fantastic. Who said that?
I said in a Harami as well.
That's a Harami as well, Andrew. Yeah. Very good, very good, very good. So we are seeing many things as per our proprietary strategy or understanding of the market. So crack and snap back we saw, and also we saw a Harami. So let's make it 0 and then do it Harami. Very good. And of course, the rule of 4, which is probably happening here, as Gautam has asked. So a rule of 4 will be more or better if it is being supported by many things which we are saying. That is, we are actually stacking the probability in our favor. That is the only difference between gambling and trading. There is a very thin line between gambling and trading. Gambling, all the probabilities, all the odds, all the time are in favor of the house. But in trading, as you were doing in front of us, as you were demonstrating, we have the ability to stack the probability in our favor. So when we stack the more and more probability, like you said, ASO, crack and snapback, Harami, and I'll show you two more. Then what we are doing, we are trying to actually stack the probability more and more in our favor. So what is the other one which my eyes has seen? I'll just share with you. So if I draw, this is the crack and snapback, and we all know if we are seeing a reversible Harami like this, and as Andrew said, our only job is this should has to be a swing low, and we'll go to the next swing low and then go to the here to stack one more probability in our favor, which is the exact 50% in front of you. So the exact 50% of the Fibonacci price did all sellers out and a crack and snapback along with the mid S1 quarterly plus 50% plus ASO plus crack and snapback plus Harami plus rule of 4. What else we need? We don't need any more than these 5 or 6 probabilities to stack in our favor before we go and take a trade. I'm only answering rule of 4 as per Gautam's first question. Then I'll go and see the strategy. So this fellow has touched both the lines, 50 as well as mid S1 quarterly here, mid S1 quarterly. And then it has closed above both the lines. And this fellow did exactly opposite to declare itself as an all sellers out, because the close is near to the low at the support, and this fellow has closed above the support, and this is a bullish bar, and it has touched, and only thing left out is the high to be taken out by 20 points, and the high to be taken out 20 points is here. So high is 64.83 plus 10 or 20 as per your back testing. So 64.93 will be entering here. 64.93 will be entering. Pivot is 93.4. So we'll possibly enter at 94.4. So we'll enter at 94.4. So if we are entering 94.4, our stop loss would be from 95 to here. 38 points, or if you are not comfortable with this 38 points, you will go to here and then it will be 54 points. Okay, as per our rule of stop loss, 54 or 34, whatever you take, our first target, supposing we are taking 54, our first target is here, which is around 54, so we are expecting a 0.9 to 1% here. So we get into this trade on a rule of 4, and then boom, we hit the target with 1%. Supposing we have taken 3 standard lots here, or 3 mini lots here, or 3 micro lot here. So what will be generally preferred to do, we'll be closing 1/3. Supposing we have taken 3 standard lots, we'll be closing 1 here, and hoping, and then we'll see what the market is doing. That is the strength at NP Financials. We are extremely strong at bar by bar. So if the next bar is doing a crack and snapback on the 200, closing above, high taken out, all those things, let's see what happens. Otherwise, we'll be getting all out here, because it has touched the mid S1 yearly. You can use the mid S1 lines, mid lines on quarterly and yearly. Probably we don't expect you to use the same on the monthly. When 200 is a beast, as you know, so probably we'll be out. We have already closed 1 here. We are running 2 trades here, or 0.2 trades on the MT4. So we'll be out here if this low is taken out by 20 points. So the low is 65.15. We'll be out at almost at the break even, for the balance 2/3 of the trade. So let's see. Our trade is running boom boom. So this has not taken the low. So we are now making money from here 95 to we have taken a stop loss of 54 or 42, and now we are running 72. So 72 against 42 is 1.8%. Almost 72 against 54 is almost 1.5%. So our next target would be here, the previous swing low, or this one, which is a quarterly pivot. So let's see what price has done. Boom. And this is almost we don't know the right hand side. No one knows the right hand side, but we always know the left hand side. So this fellow has done something which is telling us to close another 1/3. So we have already closed 1/3 here because of the 200. We'll be closing 1/3 here possibly. Do you agree with me? If yes, why? If not, why not? Please.
Yes, I agree with you, brother.
Yeah. Why?
I think the reason is, it has gone to a level which is the previous peak, and it is kind of all bias out bar as well, because it has touched the line, not close above. So probably we just need to be cautious with the next bar, whether it is reversal or you can crack and pierce through. So yeah.
Very good. Excellent. Fantastic. So there was quite a selling pressure, because the upper wick, if you see this as an upper wick of the candle, so upper wick is always a selling pressure, and the lower wick is always a buying pressure. So now this is at that point, this is an upper wick. And if you ask me why there was an upper wick at exactly this point, because it is very simple. You know why it is. So in that case, what you need to do is, you need to, at this point, if you were to ask why it stopped here, then you have to go to the previous swing high and draw Fibonacci at this point. Then you will know exactly at 78.6. That is why people took some of the profit at 78.6. That is why we have that upper wicks, which is not the selling pressure, but I would say people who are buying from this pin bar or hammer, or even a morning star, people who are buying from here at this 6362 monthly support. This is a monthly support, I believe, or yearly support. So yearly support should be always full line. So yearly support, we have to buy exactly dot at 6362, exactly yearly support. People are possibly booking their profit. So we also booked our first profit here and second profit here, and let's see whether it is going up and hitting 88.6 or not. So let's see. Woo! It went exactly and hit the 100%. Then in that case, you have two options. Either you close the trade if you have pending limit order, to pending take profit order here, pending take profit order here. So then you'll be automatically out. Or if you are not putting the pending take profit order at that point, which is 6644, such a big number, we are missing Ben 6644. So we'll be either closing that trade or we'll be waiting for the again the rule of 4 to happen. Let's see what happened. Yeah, exactly same thing happened. Rule of 4 touched, close below, and low taken out. So we'll be getting out here. So the third trade can be traded closed here or here, depending on your understanding of the market. So did I show you two examples of the all sellers? Rule of 4, Gautam?
Yes, Partha. Just wanted to clarify a few doubts, in my mind, and
Yeah.
I think it's amazing that you covered all of them. So, and it's really a refreshing, kind of thing for me. I will probably remember this for a long time now. Yeah.
Very good.
Thank you.
Because your thank you. Because of your nice and kind words, let me show you one more as a quickly as a bonus. So this is a fantastic rule of 4 as nearer to the date as we are speaking. So GBP CHF on 27th of May did a rule of 4 after a tremendous run here. After a tremendous run here. Good afternoon, Ben. How are you? I was just a minute ago talking about we are missing Ben when I was talking about 0.6644. How are you, Ben? All right. So, thanks, Ben. So 3.16% it has moved. So when you see in a month, this is a good point. This is a brilliant point. When you see for a month, price has moved 3.16%. For forex like 3.33 can be a standard one. If you study this for years, so as we have done thousands of tens of thousands of study, you can go back, make it 20,000 units, 15,000 units, so on and so forth. So whatever you do, the more and more you do practice, you will come to know that if the price has moved from month to month. So let's see this one. Let's try our understanding from the month of June. From the month of June here, the price has moved 3.99%. Fantastic. In the month means the high minus low. In the month of February, high minus low is 2.66%. From in the month of March, this one. So in the month of March, it has moved 2.67%. So can you see the similarity? In the month of April, price has moved 2.75%. Brilliant. And in the month of May, when we saw the possible rule of 4, it has moved 3.16. Is that a good opportunity to look for a rule of 4 and grab the trade from there as a real professional? Because the only difference between professional and amateur is professionals take the lowest risk. So for example, to 28 or 38 points for a gain of 109, or even for a gain of 231, whatever it is. So we saw that, and then we saw at this point it has touched close below, preferably a bearish bar, but it is not. Then the low should be taken out, and probably we place that trade. And we generally don't do this, but let me show you our trades on that, which was this one. Oh God! All right. Let's see this one. So the GBP CH, we took the trade on 29th of the 5th. 29th of the 5th, the order number was there at 9:42. At 9:42 in the morning, 29th of the 5th, GBP CH, just remember the date. Just remember the date, which is 29th of the 5th, and sell GBP CHF at 116.43. So please, you can write it down. 116.43, 116.43 on 29th of May. On 29th of May, sell. So why did we do that? 29th of May, GBP CHF sell at 116.43. Now, what is, my goodness. All right. So if we go to this fellow here, so the next bar, we waited for the next bar or the low to be taken out. So the low here is 53 minus 10, 43. We placed our trade around 43 on the next day. So we entered here, we missed this date. So that is 29th here. And the high fortunately was 51. So our order triggered at 43 and our order triggered at 43. So this is another recent trade as we speak after the 3.31% 13% rise. And supposing you're entering at 43 with a stop loss of 39 points and you are running a profit of 160, so that's a 4% trade in front of you. Did I answer your question, Gautam?
Yes, Partha.
Next question.
Thank you.
Explain. Can break one, cannot break two, with two examples in recent trade. Does it need to be looked at from peak and trough perspective or by bar perspective? Both. The answer, you have punched two questions here. I would say from both. So either from peak or drop, number one, and then bar by bar, number two. So I'll explain that. Can break one, cannot break two. So let's just see the example, same example on from a perspective of one. So supposing there is another way also to actually okay, let's see, no, let's concentrate on the question. So rule of four in this case, Ben, would you like to help me identifying which one is number one and which one is number two in this in front of you? The last date is 27th of May. Or anyone?
The last bar is number one and the previous bar is number two.
Very good. Why?
I mean, we can clearly see that right hand side, that bar is touching the line and that has closed below. Possible reversal.
No. I'll take that line off. Now there is no line. Now tell me. I took those lines. Answer is correct. 1 and 2 is correct. Marking is correct. You need to tell me why. Very simple. It's not rocket science. You already know that. Anyone?
The number one bar is the highest price, the high point.
Number one is the highest. Very good. Very good. Very good. Very good. This is the highest high, and this is the next highest high. I don't know the English. Maybe next highest high. Next highest high is correct English. Ben, Andrew,
Previous.
Dario.
Yeah. Makes sense.
Because I'm not a native English speaker, I always learn. Anyway, so this is highest high is at this point. We don't know the right hand side. So this is the highest high. So at this point, that was number one. That was number two. So if you see at this point when we were here, so this is one, and this is two. So if I do copy, this is two. So when we were at that on that date, said 22nd of May. So that is one. That is two. It can break one means it can break with our rule of four here. It cannot break this means what? If it is breaking this low with the rule of four, then the possibility of a consolidation or a corrective action, which Marty will come. Marty is contributing tremendous with his news analysis in our Discord channel, which I would request Marty to show when he is in when he is doing it. Actually, you can actually enroll for the tremendous news analysis which is being done by our senior trader Marty at Discord Access Allow. All right. And then and if you go to this one here, Discord, let me show you what he is doing. He is doing this news and events, which is extremely allow. Oh my god, how many times I have to do allow? All right. So let me bring this Discord in front of you. All right. So this is the Discord in front of you. and this is the Elliott wave. I leave it to Marty to explain the news which he is going through when he is speaking. All right. So that was number one. Number two, is it clear to everyone, and especially the Gautam who has asked the question?
Yes, Pata.
Then I'll go to the next one. It has broken one, but close below low taken out. You need to see and broken. It should not break two. Let's see. It did not break two. Okay, forget about that. Now, what we'll do, we'll take this. This is very dynamic, my dear friend. This is one. This is two. Everyone agrees. Those of you who are in the third or fifth per month, everyone understanding what am I doing, or am I doing randomly? If I'm doing randomly, please stop me.
Now good.
All good.
Sir.
Very good. Very good. I gain courage, and then I go, and then that becomes one, and this becomes true. Yes or no?
Yes.
Very good, very good, very good. So this is bar by bar, highest high and then lowest, and then we need to see it can break one, it can break two. Of course, our job is to draw this line here, and this is a daily line. So 12 hourly. Anyway, I'm doing it 12 hourly. No, doesn't matter. It can be a daily also. Doesn't matter. So I can. The concept is the same. So I'll do the dotted 4 and waited for those of you who are doing the 12 hourly. 12 hourly is a tremendous strategy. I love it. I love all the strategies, but 12 hourly is a brilliant one. I'll tell you why. Because of this reward to risk. Anyway, so this is one and this is two. This fortunately now we are in 12, we have landed in 12 hourly. It doesn't matter. Doesn't matter. So let's do the same thing, one and two, and then boom, boom, boom. So this fellow is broken. This 116.44, which is the low, it has closed below, and this low, which is 116.60, 116.27, to be taken out by 10 points, 116.17. So if it is going to 116.17, I see. Let's see how this one. This is 22. So if this is going to 617, then we'll be breaking to a bit can break. Ooh, this fellow had broke two. This fellow has broken two. It can break one, break two, and then we are already short, and then boom, 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 boom. All right. So did I answer your question on break one, break two on the bar by bar, Gautam?
Yes, Pata, that's correct. I just wanted to, clear my doubt. Like, what I was thinking previously. Like, obviously, one was, I was thinking that one would be the bar, which is the highest high, and the second I was thinking was the previous trough. So
This one.
no, not that one. That one. That the cursor where you are.
Hmm.
I was thinking that in order to go short, on a confident basis, I need to make sure that that trough needs to be broken, or the swing low needs to be broken. Then only I would get enter, for the short trade.
Fantastic, brilliant. I hope everyone understood Gautam's dilemma or his understanding. If anyone has not understood the Gautam what he has said, please tell me. I'll repeat. Otherwise, I'll assume that everyone have understood.
Please repeat, sir.
All right. So Gautam said, as per his understanding, nothing. That's the beauty of trading. Nothing is wrong and right in trading. The only right thing in trading to you and to me is whatever is making money. If our strategy is making money, that is the right thing to. If our trend detector is making money, that is the right thing. If our proprietary Bollinger Band is, oh my God, this is look at this divergence. If our if our divergence line making money, that is the truth. Only perpetual truth is whatever is making money. So that is why I'll not say Gautam is wrong or right, or no one is wrong or right. I'd always say that was his thought. So I'll not say correct or wrong. So what his thought, I'm repeating on I think Vijayta or Girija's request. So he thought this is one and that is two, right, Gautam?
Yes, yes.
So what Gautam is doing it here, and before I put my 2 cents, anyone who wants to clarify Gautam, what he is doing?
Sorry, question for me, Pata.
Mm-hmm. Yeah, you can also answer the question to everyone. What is the problem in this understanding of one? This is one. This is two. Anyone? Thinking. All right, I'll help you. So, as per my understanding, Gautam, you are a little bit getting mixed up. So, you are mixing bar by bar with the highest high, but also thinking swing low as the highest. So, that is that you are mixing bar by bar and 1 2 along with swing low. No, you should not do that. If you are doing the swing low, that is what you have actually asked, and I said yes, both are true. So, in that case, this swing low should be the 1 2, and this swing low should be the 1. So if you are going swing low by swing low, so the blue color, let me change this color to green, so it will be clear. I don't know what green is that. Okay, green. Let's make it a little bit bigger so we completely clearly understand. So the green in front of you with size 10, green in front of you with size 10 is bar by bar 1 and 2, and swing low or trop. Generally we consider swing low because price is not perfect, that is why it's difficult to see trops. From swing low's perspective, this is 1 and this is 1 and that is 2. So depending on your back testing, because this is not a get rich quick scheme, so we all have to go through 5 phases. The first phase is to learning through instruction based discussion. Second one, practice tasks, practice as much as possible. Then do back testing as much as possible. Then do demo trading with 75,000 or 50,000 or 40,000, whichever is comfortable with. Ask the money, of course paper money, and they will give you. And the last one is, if you have proven to yourself and you are happy with the last 4 strategy, and we'll do the 5th one. So, go, someone is saying something. Anyone said something? All right. So last one is live trading. Most people, many of the people actually sometimes get confused, and they ask me question, when can I start live trading? Before completing this learning process, before completing the practice task, before completing the back testing, before completing the demo trading, if you want to go to live trading, no one is stopping you. You can anytime go to live trading. If you are going to live trading, then possibly the possibility of blowing your account is increasing is tremendously. So blowing your account is increasing tremendously. That is why we don't suggest that. Just to answer Gautam's question, so if you are going bar by bar, this is 1 and 2, Gautam, and if you are going swing low to swing low, 1 and 2, who should go to 1 and 2 on the green, and who should go, or who is going for 1 and 2 is, there are 3 types of traders. Trading has nothing to do with trading after you have completed the 5 phases. After you have put all your effort of learning, practice task, backtesting, demo trading, after you have done and you are doing live trading, when you are doing live trading, then I always say trading has nothing to do with trading. Trading has to everything to do with our internal characteristics, how greedy we are, how fearful we are, how disciplined we are, how controlled we are, or how much backtesting we have done it. So trading is a mirror. Trading is a mirror which will bring our internal characteristic out bluntly, absolutely bluntly, mercilessly, absolutely mercilessly. And the third English coming to my mind is ruthlessly. Ruthlessly. So trading teaches us or brings our internal characteristic out ruthlessly, and there is no control. There is no control. I'm missing Kerry here. There is no control whatsoever to stop that. So if you are a little bit of ahead, and you are doing backtesting and demo trading for and you have seen this tens of thousands of times, then possibly you are a calculated risk taker. So you will consider bar by bar, 1 and bar. If you are a risk averse person, then you'll be possibly consider swing low as 1 and swing low as 2. You'll enter here. If you are a calculated risk taker, professional trader, you'll be entering here after seeing a turning point. So we saw a turning point, and then the balance portion is waiting for here, the first break. Balance is here. Risk taker has entered here. I would not risk taker. I'd say calculated risk taker, because he has seen or she has seen tens of thousands of times. And the balanced person will enter here, and the risk aversive person. Nothing wrong with risk aversive person. Nothing wrong with balanced person. Nothing wrong with the calculated risk taker. But only thing which is differentiate them is their profitability. So the risk calculated risk taker, which is a professional, which is only because he's a professional, because he has seen more times. The professional will enter at 49 points per risk and getting 140 points now. The risk balanced person will be taking entering here with a risk of 92 points and running 92 point 91%. And the risk per aversive person would be possibly entering, if his big bar he's considering this as a risk or this as a risk, 129, and he's rushing. All three of them are running in profit, but some with 0.2%, some with 1%, some with 3%. Did I answer your question, Gautam?
Yes, Pada. Thanks for clearing that. I mean, currently I'm entering at the first swing low when it is broken for the reversal trades.
Yeah.
So I'm entering at that level just to be just to make sure that it doesn't go against me.
Yeah.
But yeah, I will probably do some back testing, for the bar by bar, that particular scenario, and then see if it makes sense. Yeah.
Brilliant.
Yeah. Your explanation has cleared a lot of doubts, in my mind. So yeah, good. Thanks for that. Yeah.
Fantastic. Anyone wants to comment anything or add or delete anything? Delete is not possible because it has already been spoken. Anyone? Otherwise, I'll go to the third one.
One question before you go to that, just like probably 5 seconds for you to answer. Let's say if you go back to that chart, same chart, you are on that particular turning point bar over there, right? And obviously the rule of four, the can break 1, can break 2 has already happened over there. But just suppose that that it has broken 1, but it has not still broken 2 bar by bar, just for a hypothetical situation. And at the same time, you see a turning point on line chart, then you would not consider that second line to be broken, right? Second bar to be broken, you would just straight away enter.
Yeah, this is a 2TP scenario. So
Yes.
this is a 2TP scenario, what Gautam is saying. So if I consider this, and because the histogram has touched the line,
Yes.
in a 12-hour histogram, it should only touch. In a daily histogram, it should only cross. So this is a turning point on the line chart. And by bar chart, if you see the bar line chart here, so this is a turning point there. So the only difference is the turning point on the bar chart happened at 116.38, and the turning point on the line chart has happened at 116.05. So in that case, Gautam, you will be entering at 116.05 minus 10, which is 115.95 on a 2TP entry.
Right. Okay.
See, if you concentrate on the bar chart close at this point, line chart turning point, tell me the bar chart close.
115.95.
And the line chart close?
1605.
1605 minus 10?
95.
That
Yeah.
that if you're entering at 95, the bar chart has already closed.
Yes.
Fantastic. So that's fantastic. It took me more than 5 seconds, Gautam.
Yeah. That's correct. No, thanks for that. Yeah.
No problem.
Here's my doubt. Yeah.
And the last question is, explain the concept of gaps. If possible, explain types of gaps with examples. For types of gaps, we need to go to our strategy, which is share trading. All the asset classes are different. The forex is different, shares are different, and the commodities is different, bonds and indices are different. We see more gaps in Australian shares, for example, the BHP or Rio Tinto. For me, it would be easier if I take the advantage of going to BHP to show you the gaps. Otherwise, I'll have to search for the next 30 minutes to find gap. The only difference between having gaps or not having gaps is gaps would be predominant if we are looking for an instrument which is traded according to the exchange time. Like this BHP Group Limited, ASX, Australian Stock Exchange, is traded from 10 to 4 Sydney Melbourne time in Australia. But this fellow in South Africa is also trading in different time frame, and this fellow BHP, same company in London Stock Exchange, has traded in different time frame, because we are GMT plus 10 at Sydney plus Melbourne, but London is GMT plus 1, I believe. And then same BHP, same group of company BHP at New York Stock Exchange, they are trading at different exchange. So when you see the shares, when you see a share, even one share which is 24 hours. So for example, okay, let me finish this first. If you see a share like BHP, Rio Tinto, big companies, they are traded all through the globe: Australia, South Africa, wherever there is a mine, or even there is no mine in London and New York. So they are traded in different exchange time. That is why we can experience gap. So let's see that gap in BHP here. Dun, 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 dun. Let it come. Boom. All right. So maximize price. Look at this gap. Look at this gap. Look at this gap. Crazy. All right. Now, if we even we are not trading BHP because of this problem, gapping problem, there can be a little bit of gap here and there from for 24 hours as well as all session. So if you see all sessions, that means everything it is being like the Nasdaq, like London Stock Exchange, like Canadian Stock Exchange, wherever Meta is listed, it will be traded all sessions. And if we see on that all session, if we see on a daily chart, probably you will not find any gap. Probably there will not find on any gap. But if you make it at 24 hours, then possibly 24 hours, in the 24 hours you'll possibly see some gaps, like this gap here. Some gaps you will possibly see, some gaps here and there, like this gap here, because 24 hours is more to do with the exchange time and less to do with order order book of the market makers. So that's why we'll see small gaps. Now, the second question was, how many types of gaps are there? There are three types of gaps. One is continuation. Sorry, first one is breakout gap. Second one is continuation gap, and the third one is exhaustion gap. So let me try to find out the three types of gaps in a instrument which we trade regularly, which is Facebook, for example. So if you see a gap which is trying to break a line, if you see a gap which is trying to break a line, that is a breakout gap. Simple English, breakout gap. That is, it is breaking out. It is breaking out. It is breaking out from some support or resistance. So this would be a breakout gap. This gap would be a breakout gap. And if you see, after breaking the support, like this is a resistance line, this is a typical head and shoulder. This bar being a outside bar can be a swing high as well as a swing low. That is a problem. But anyway, this is technically, this is correct. So in that case, if you see after the break of this line, if you see any gap here, we would say this is a continuation gap, because price is already broken. Price is already broken with a small gap here, this close and this open. So the price is already broken a small gap here, and this is continuation gap. So we saw continuation gap, we saw breakout gap, and the last one is exhaustion gap. Exhaustion gap would happen at a resistance, and that resistance can be dynamic. That resistance can be our shadow here, or that resistance can be Fibonacci. So if you are here at this point, you can easily draw Fibonacci from here to here to see, is there a possibility 50% there. So there is a gap here between these two. Mind it, the eight or nine instruments which we trade in share asset class, there is not any gap. This is very difficult to find a gap on an asset class called forex. Forex is 24/5, hence there is no gap. Commodities also, you may find some gaps, especially in a rough rise. So if you see a rough rise, there will be tremendous gap, because that gap is different. That gap is different again. Rough rise, that gap is entirely different, because commodities are continuous contract till very recently. But all the 8 commodities we were trading for last 10 years were continuous contract, but recently out of the 8 instrument in the commodity asset class, they have now gone to discrete contract. So they have done a discrete contract for they means broker. So the rough price is now discrete contract. So you'll have a tremendous gap here. Don't consider this as a breakout gap, or this has nothing to do with gap definition of breakout or continuation or exhaustion. This has to do with the contract, 3 months contract from here to here. So that is what. But if you really want to learn about gaps, which is not very predominant, but only in 24 hours, you can go and learn the gaps, especially in a, I would say not to, I would not say notorious. So, but anyways, let BHP come. So BHP Australia, yeah. So you'll find a gap, and in that case, what type of gaps you'll find immediately is, if you see a gap at a support zone. This is support zone. If you see a gap here, so let's draw a line. Let's draw this one here. Take this one. Let's draw this swing high to this swing high, this swing high to this swing high. In between there is a swing low. In between a swing low. So this swing high to this swing high. In between there is a swing low, and that swing low is broken. So that's a valid continuous, valid confirmed trend line. Valid confirmed trend line. Valid confirmed trend line. Only it should be red because the downtrend line. Valid confirmed trend line from as per our definition, because we are joining swing low to swing low with the in between joining swing high to swing high with the in between swing low is broken to the downside. So confirm trend line. Then if you see a gap here, so this is the close here, that is the open there. So this is the breakout gap because it is breaking. English is a strong language, powerful language. Breakout gap. And then don't get confused English with Japanese. In Japanese they say harami, which means pregnant lady. Very different. All right, so now there is a continuation gap. This close here and this open here, so this is a continuation gap. This is a continuation gap. This is a continuation gap, and this gap is an exhaustion gap. This gap is an exhaustion gap because it is coming at a resistance with an exhaustion. That means this move from here to here has been exhausted. Also, you can take advantage of the scale. You can take advantage of the scale and see how much it has moved in the previous 8.18%, and during the exhaustion how much it has moved, 8.57. So from this understanding, you have to do a lot of practice. Don't jump tomorrow and measure this and then take a trade. Do at least thousands times and to understand the concept of this percentage movement, and then see the exhaustion gaps there. Did I answer your question, Gautam?
Yes, Pada. Thank you.
Unbelievable. All right, very good. So now I'll go to Dhanuka's question. Wow, very good. A few general questions for this session. What time frame is more profitable for you in terms of trading over the last 10 years across all trading types based on your historical recorded data, day trading, swing trading, etc., daily, 4-hourly, 1-hourly, 5-minute? Brilliant question. Anyone wants to take this question? No answer is wrong or right.
Swing trading seems to work pretty well.
Yeah, swing trading. Yeah, thanks, Marty. Brilliant. Why?
Why, instead of being so caught up and just trying to take 10, 20 points out of the market for that day, you can just place a big position and just leave it go for quite some time.
Yeah, absolutely. Anyone, very good answer, Marty. Thank you for that. Anyone wants to add?
Depends on your time availability and lifestyle as well. Like, if you are if you cannot sit for a longer period of time in front of the screen and just look for possible trades like hourly or 5 minutes kind of thing, then swing trading or 12-hour or 4-hour is better. lower time frames are more volatile as well in terms of forex trading. So yeah, it can take a lot of stress out of you as well when you are in front of your screen and the price is jumping in and out. So yeah, so it depends on your risk appetite and the patience level and the time availability as well. Yeah.
Fantastic. Brilliant. Excellent answer. Thank you, Gautam. Anyone wants to add? All right. Then I'll add my 2 cents. The answer is in front of you, Dhanuka. So if you go to NP Financials and then
Sorry,
go.
sorry, but I'm in a very noisy place. That's why I'm not talking. Sorry for that.
No, no
Yeah.
problem. At least you can hear us, right, Dhanuka?
Yeah, I'm just listening. Yeah.
Okay.
Thanks.
Very good. So the answers, what Gautam said, Marty said, is all correct. So it all depends on your. So this question, everything as Marty said, the lower time frame can be dangerous because the whipsaws are dangerous and create a problem. So the entire thing would depend on two things, as per my understanding. The first thing is your time availability. So if you are a time rich person, then possibly 1 hour or 4 hour would be best for you. If you are a time challenged person, then possibly daily and 2 day would be best for you. If we are very having a patience, like two or three things are the crux of the matter. All said and done, my dear friend, at the end of the fifth stage, that is learning, practice tasks, demo, backtesting, demo trading, live trading. At the end of that, you have only three choices, which are nothing to do with trading. And those three choices are whether we are time rich or time poor. Number one. Time poor, time challenged people who are working 9 to 5 and also learning forex or shares or commodity. Time rich is like us, which I am not having any other job but to see the chart 8 hours a day. So I'm time rich, fortunately, thank God. And second is risk appetite. Now, second is patience level. Do you have a patience of an angel, or are you very impatient? So if you're very impatient, then possibly your subconscious mind, we are missing Kerry Brown again. Your subconscious mind will force you to look and take trade on 1 minute, 5 minutes. But if you're having a patience of an angel, then possibly you can be happy with your daily 2 day trades. And the third thing is the risk appetite. If you want to take, if you want, you're happy with a balanced type of risk approach, then you'll be possibly go with a daily. If you are with a risk calculated risk, possibly you'll go with 12 hourly and 4 hourly. 4 hourly, but I would say daily, 12 hourly, 4 hourly can all generate a little bit of variations as it is in front of you. So if you go to NP Financials and go to trade ideas, it is all in front of you, Dhanuka. And if you see the performance of our daily swing trading, as Marty said, along with our 12 hourly swing trading, as others said, and along with the 4 hourly swing trading, and of course, our own client arena, which is based on daily and 2 day. If you see this, you'll be on getting your answer automatically. So in the client arena, in which primarily we give daily long-term strategy, it is having a record of 882 points per month for last 10 years. From the start of the daily swing trading on the Discord is a new thing. Discord is a new thing. We are getting 779 points compared to 882. When we are going to 12 hourly, when we are starting 12 on a Discord, which is very new thing, 229 points per month. Similarly, when we are going to a 4 hourly, because of the whipsaws, we are getting 137 per month. Some people would be happy with 137. Some people would be happy with 229. Some people would be happy with 779. Some people would be unhappy with happy with 882 points. So it all depends on those three things, my dear Dhanuka. Did I answer your question from the time and patience and risk level?
Yeah, all good, Partha. Yeah, I think what I was thinking about just the forex at the moment. So what I see, like so many short-term movements. Sometimes if you hold for long, I think based on asset class as well. So if you just look at the forex, this is just my observation. It sometimes maybe short-term trade would have worked out better, but you have already proven I'm wrong, so that's okay.
Fantastic, brilliant.
Yeah,
And
thanks for
also,
that.
yeah, I don't know whether you were there or not when we are sharing our recent screenshots of the trade. These are all mostly, this is a 4-hourly trade in which written pivot, PIV, and this is a trend line break. This is a pivot 4-hourly, 4-hourly. This is daily divergence, 4-hourly, 4-hourly divergence, falling three method. Otherwise, most of them are daily. So it's a mix. I would consider, if you are really trading for your living, I would consider try all of them daily, 12-hourly, 4-hourly swing trading, and see which one is going well. If you can resonate well with all of the time frame in front of you, then you are enjoying your trading. Make sense?
Yeah, thanks.
Second question: which main asset class should be focused on a higher risk reward ratio? Higher risk reward ratio, higher reward to risk thing. I think, yeah, RRR multiple. Based on your experience, I know that you promote all assets for trading. Yeah, of course, but I'm asking based on your trading data for the last 10 years. I would say, from my experience, I would say, I can be entirely wrong, because again, this has to do with your risk appetite. Kerry would have done a better job than me to answer this question, because these are all internal characteristics: time rich, time poor, impatience of an angel, or I don't know the opposite, impatient maybe. And the third one is the risk aversive, risk balanced, and calculated risk taker. So in that case, I would say, from the R multiple, that means reward more compared to the risk. I think the 12-hourly can be very close, at the top of the list, 12-hourly, because when you do this. Andrew has done a tremendous job, and I think Vijayta also did a tremendous job. Let me take this opportunity to show their work, which they have done. All of you have done this, but I'm very pleased with this type of hard work which Andrew, Vijayta recently have done, and all of you, including Ben, Marty, every one of you have done, and Kim also, everyone. I'm not sorry if I'm missing anyone, but those of you who have done hundreds of trades here, hundreds of trades, edit latest, yeah, 400 and 420 trades, something like that. How many trades? I don't know. 400 of them. Andrew, right? 400 trades.
Yeah, 413 looks like we're up to. Yeah,
400 trades has been documented in front of you. 400 trades has been documented. If I take the filter out, select all, yeah, 400 trades are taken, and the most important is the maximum loss is 1%. Maximum loss is 1%, and the maximum win, maximum is, I have personally gone through this trade, 28%, maximum 28%. And look at the beauty of matching this 420 with this 420 with this 420 with this 420 and this 420. This is brilliant job, excellent job, fantastic job. So if you do this type of detailed work, which all of you have done it, so I think it will automatically tell you whether the daily or the 2-day or the 12-hourly or the 4-hourly is good for you. Similarly, whether the asset class forex or shares or commodities are better for you. But just to answer this question, I've said 12-hourly is very close to this answer question. And the second, from the forex perspective, and the second is the there will be a possibly tie between shares and commodity and shares, because they go long or short for a long period of time. So for example, if I have to show you recent shares on the Nvidia, There will be tremendous opportunity in our strategy in NVIDIA. So let's see the recent trades on the NVIDIA. And if I reduce the price here, so this is our first trade here, and the second trade was here, and the third trade was here. So if you measure this, on NVIDIA, our first trade here, entry and minus. So 66, if you have hang on to the trade, or if you have closed on this rule of 4, you got profit here. And the second one trade, this is the first, second one trade is here with a stop loss of 60.69. You are running with a profit of 145. And if you're taking this third trade is a good one because of these small bars. Okay, I'll add one more cents here. This is only 32 or 40 50 pips, and the profit of 5 for 200 points. So from the reward to risk R multiple, from the R multiple perspective, the winner is not any asset class as such, but the winner is the small bars which are generating the lowest risk because of their size, and the highest reward, and because of what happened after. So if you see in any asset class, small size bars, not big bars like this fellow, small size bars, then the reward to risk in that asset class for that instrument would be tremendous. But otherwise, shares, commodity, and forex 12 hourly are very close to your answering that question. Did I answer your question, Dhanuka?
Yeah, all good, Partha. Yeah.
Fantastic. Third question, last question. In the meantime, Shreya has posed a question: what causes a continuation gap? All right. So I'll just complete this and come back to Shreya's question. What causes a continuation gap? Thanks, Shreya, for asking that. Third question is: how long would it take to be a full-time trader quitting the job with a reasonable profitability based on your strategies? Say, trading on 100,000 account and need to generate at least 5% monthly return. I know trading is risky and no guarantees, and it says 90% of traders fail. Very correct, very correct. This is this is a very good question, actually. Interesting question. Interesting question. As I said, it takes minimum 1 year for any asset class, whether it is forex 1 year, 6 months commodity, 6 months shares. Most of you have done all of the three asset classes. Ben, Marty, most of you have done Sri, most of you, Girija, most of you are doing these asset classes. So at the end of these all the asset classes and doing the learning, practice, task, backtesting, demo trading, and live trading, against it will boil down to Kerry Brown. Ultimately, it will boil down to Kerry Brown, and trading has nothing to do with trading after when we are in the fifth stage. In the fifth stage, trading has to do with our internal characteristic, which has nothing to do with our trading. It all depends on our childhood. It all depends on how we are brought up. It all depends on our financial cycle where we are in. So if we have done this and following all the rules, following everything, then 5%, 3%. I would say if you do 3%, even 3% in a month, resulting in 36% in a year, which is equivalent to what Warren Buffett is doing for last 10 years, 36 or 20 years, 36% return, and he's one of the best of the best. Although the best has died just now in this month, Jim Simons. He was the greatest trader come mathematician come philanthropist. And if you see some of these models in mathematics, I go crazy. I go crazy. So it took it, and this fellow died. There's almost 80 plus, and this is the mathematics he used to do, and he has earned for his $100 billion for his Renaissance mutual fund. So what I'm saying is 36% is not bad. If you were doing 3%, then possibly 3% on 100,000, especially when you are doing on a prop account. So you'll get only 70% of it. Otherwise, if you're doing on your own account, that will be 3,000. So 3,000 possibly would not help you to quit the job. Maybe you are getting 6,000. Maybe you are getting 10,000, 15,000. So 3. So I would say 3% is a reasonable target if you're completing all the asset classes, forex, shares, commodities, and then helping you with your greed, fear, and discipline and control. Then 3% is a achievable target, but the amount has to be a little bit increased. Maybe 250,000. 3% would be 7,500, which is not bad. Did I and this Kerry Brown, we'll park this question when Kerry is back next class, and she can answer this question. Did I answer your question, Dhanuka?
Yeah, all good, Partha. Yeah. I think I was just asking just to see, like you said that you are time rich. So sometimes, you can find out the effort you need to put in. So to become time rich. So that's why I asked that question.
Yeah, you need
So
to be
it's like, yeah,
you need to be time rich to trade all the asset classes, all
yeah,
the strategies.
yeah. So
See,
that's
this
why I just ask. Yeah,
forex, this is forex, this is Bitcoin, this is Ethereum, this is
yeah,
forex. Yeah, US dollar index, Hong Kong index,
yeah,
commodity. This is commodity. So all the asset classes, all the strategies. If you can trade and make money, you are happy, isn't it?
yeah. Thanks, Partha.
Not a problem. I'll come back to the Shreya's question. What causes a continuation gap? Anyone wants to take Shreya's question? What causes continuation gap? Maybe our notorious friend BHP. Anyone? Continuation gap?
I think it's as you said, it's if a particular share or a stock is being traded at a multiple time frame, like at a different time zones, then there is a possibility that I mean, if it is like in a trending market, then after one exchange closes and then second exchange opens up, there might be a possibility that there will be a price difference, and that can cause a continuation gap.
Yeah.
But
Very
what
good.
about the news gaps, Partha?
News gaps. I have never heard of that.
No, when there's a news, like always, it gaps up some.
You're right. You're very right. You're very. I'll answer that question. Interesting question. Anyone wants to add what causes continuation gap, just to help our friend Shreya to understand? No? All right. So I'll try my best. Continuation gap at NP Financials, what we have done is we have tried to break the understanding of whatever, whether it is gap, like this fellow is coming to go long on a breakout gap. This fellow is exactly coming on a continuation gap. And this fellow is coming after a exhaustion gap. Anyway, so we are not the question she has asked is not about our strategy. The question she has asked about what causes a continuation gap. Continuation gap caused by one aspect, as per my belief, at NP Financials, what we have done, we have converted 4 English words or phrases into mathematical coding, following our greatest. I have never met him, but I really love him. I really like him. And we want one of the very if I am 0.001% close to this fellow, then my life is done. He's brilliant. So we are not so brilliant, but we have some understanding of mathematics, little bit. So with that little bit knowledge, as I always say, the only thing I know about myself is I know nothing, and the only other thing I know about myself is I am no one. Because if we have these two grounded belief in our understanding, then possibly we'll continue to learn for the rest of our life. Anyway, I'm answering the question of continuation gap. So continuation gaps happens if the like a support, we are seeing a support. So let's say understanding long is a good thing because that matches with our belief, like Kerry Brown said. But understanding short is difficult. So I'll take this advantage of understanding long and continuation gap. Continuation gap is which happens when the buyers for a long, you make it the opposite for the sellers. When the buyers are eager to push, we are eager to push the price up. And the buyers are willing to push the price up. When the buyers are committed to push the price up. So that creates the base formation. So this is where the hope is from the red, from the red, from the red shadow to the green shadow. Means it is not always a trend change. It is a shift. It is a shift. It is a shift from SHIFT. My pronunciation may not be perfect. So there may be a shift between from the selling side to the buyer side. Till this point, the sellers were controlling the market. Now the buyers are eager, committed, and the other one English I told you, forgot. What was that, Andrew?
So I don't think I said anything.
No. I told you committed, eager, and
Oh,
willing.
Yep.
So when the buyer started doing that, and the continuation gap happens when they started controlling. When the buyer started taking the control over the sellers, then possibly a continuation gap happens, and buyers are now really controlling the market here. So that is my 2 cents. Did I answer your question, Shreya? Shreya is muted. All right, so I'll go to the last bit of my 7 minutes I have before handing over to Marty. And I have a question from Vijayta. Vijayta is asking how to identify the possible next week short-term trend for the following currency pair: dollar index, Aussie dollar. Dollar index and Aussie dollar in short term. So let's go to forex. File, load, forex. Dollar index and Aussie dollar. So let's first do the dollar index and then we'll do the Aussie dollar. So dollar index is DX, which is also known as the US dollar basket. And if you see the dollar index, that's a general question, not based on strategy. So I will maximize the price to answer that question. From the dollar index perspective, what we are seeing, the head and shoulder target is approaching. Head and shoulder target is approaching. So that is one very close. This one is very close. So target is approaching. That is number one. But I think that is number one, maybe two. But the thing which I'm more interested to see on dollar index is, maybe Marty would be talking about dollar index. I don't know, because it generally covers the major ones. So we are breaking the 200 on a again. I'm in a daily chart. I need to go to the daily chart. So yeah, it is playing with the 200 moving average as it did here, after crossing the. This is the control. This is the controlling of the buyers over the sellers. Generally, they say if it is below 200, sellers are in control. If it is buyers 200 above 200 moving average EMA, buyers are in control. But we have our own definition. We will possibly buying from here. Anyway, so after buyers are in control, so this is the retest of the buyer's commitment, eagerness to hold on to the 200 moving average by the sellers. Again, the same thing happening. Testing is being going on. From the seller's perspective, to hammer this 200, to break the buyer's confidence. And if they can do close below, low taken out, and tagging the Bollinger Band, then it will be a first trough touching the lower Bollinger Band, second trough touching the lower Bollinger Band, maybe the third trough touching the lower band, and fifth and seventh, or weakness thereafter. So I would say it's a very dicey situation for a dollar index, my dear friend. The only thing which I'm looking for is to break this little bit of range which is happening around the 200 moving average. Either I expect, who am I to expect? Either I will see. I don't want anything. I want to see. We'll see whether it is closing below the 200 and low taken out to go down, or it is staying above the 200 to go. It's very difficult. Maybe Marty would be throwing more light to this. From the lower time frame, you said lower time frame. which may be the 12 hourly or the 4 hourly. That is the lowest we go. Of course, we go to intraday 15 minutes. Yeah. So from the 12 hourly perspective, Vijayata, we need to see a Kraken snapback for the going long, or a low taken out because it is already touched close below bearish bar and low taken out to go short from the lower time frame on the dollar index. And then going to the Aussie dollar. Aussie dollar would just do the opposite for the dollar index, because in Aussie dollar, AUD USD is the term currency, and the chart is being plotted for the base currency. So the chart is being plotted for the base currency. That means our friend Aussie. All right, so Aussie is going down, and then a little bit of correction there. Impulsive corrective, Marty would touch this maybe, and then possible impulsive, I don't know, I may be wrong, but any which way. So if the dollar index goes down, now we are in a short term time frame, because the 430 is approaching me. So so if the dollar index is breaking the 200 on a 12 hourly and going down, then this is not having any other option but to go up, because USD is the term currency here and AUD is the base. In dollar index, dollar is the base currency. All right, so that is my 2 cents for the dollar index and AUD USD. And let's see on the daily perspective what it is doing. Yeah, not bad, not bad. It is a support of the pivot here. It is a support of the pivot here. And if I take the advantage of our pivot plus EMA, those of you who are doing pivot plus EMA, that's a good study. This pivot point was above the EMA, so price went up. And this pivot this month, possibly next month, which is coming. This is why pivot point is a leading indicator. Is a leading indicator because that comes before the start of the month and stays there. Ooh, how good is that? Very good, very good. The other two leading indicators are Fibonacci and divergence. So from the look of it, I'm not very aggressive to go long on this, because the pivot point, both the pivot, although there is a golden crossover happened here, my dear friend, if you remember the golden crossover, 50 crossing the 200 from bottom to the above, from below to above, but the 250 would probably is saying low. So I would not do anything with the Aussie dollar unless and until we are seeing a dollar going down, breaking the 200, and Aussie dollar coming up and then coming down and going up. So did I answer your question, Vijayata? Vijayata says, thanks, sir, for clarifying. And Shreya says, outside and conversing through clear chat. All right, very good, excellent, fantastic. Anyone wants to add anything on the US dollar and Aussie? You have 23 seconds.
Partha, don't you see a falling wage pattern probably on this time frame, which is kind of continuation pattern for going, like it will continue to go long once the price breaks that wage?
Okay, so when you talk about wage, then we have to take this everything out. So let's take this out, let's take this out, everything out, everything out, everything out. Then falling wage, it is better to see in a naked chart those price patterns, wages and flags and pennants and triangles. You are seeing the pattern on a daily chart?
Yes. I mean, wage or a flag, I would say, whatever you want to interpret is, but
possibly it is a flag.
yeah,
And flag is a
it's a continuation pattern. So possibly when the next bar, if it breaks above, that flag line, I mean the high of the last bar, and close above, then probably might be a breakout for us to go long.
Very, very good point. Very good point. Excellent point. Very good point. Very good point. As of now, I can see another thing. This is there is a falling two method. This two has not closed above this, so there is a falling two method below up to this point. So anyway, so let's thank you very much for listening to me for so long time and answering brilliant question. Now I would like Marty to add his understanding along with the new things which are being done in Discord. And thanks, Marty, and over to you.
Okay, thank you, Partha. Hello, everyone. How are we today?
G'day, Marty.
Oh,
That's
great, Martin.
great. Very good. Let me just figure out how to share my screen again. That one looks okay.
That up arrow within a box.
Okay, has it worked? Can you see my screen? And you can hear me okay?
Yeah.
Yes.
Very good. Okay, so first of all, the Discord thing. So what we've done here is we've added an Ask Me Anything and a news and events segment to the Elliott Wave channel. Okay, so here is where I will post the trades here. The news and events is where I will post anything which I think has some substance to the markets moving forward. So where I would believe big money is actually getting persuaded towards. So things like the G7, China's economy. You have the BRICS members here, and it's a lot about that at the moment. So all your Asian countries, so Singapore, Philippines, all these places here, they're all trading very well with each other, having bilateral trade with agreements to use their local currencies to trade instead of using US dollars and things like that. So by doing that, that will give you signs to how to look at the US dollar and an indication of how the big money is looking at the dollar at that time. Okay. So that's what this is about. So we will be taking advantage of larger swings when we're trading. Okay, so if we look at this here, we've got the G7 and the BRICS, the real GDP growth forecast. So coming up for next year, they think the US, the biggest economy in the world, is only going to grow by 2.7%. However, we have India, a bellwether for an emerging market. They believe are forecasting to go to 6.8%. Okay, so I'll post information like that. And for yourself, if you were to come and look at the Nifty 50 after looking at that, oops, I'll just get this up. So you can see there's a very large impulsive wave up. And this is just a little corrective wave down. Okay, so if this is predicted to grow quite substantially this year, it would be worth your while looking into some major companies to trade long on the Nifty 50. Okay, so it might be just a little bear flag pattern waiting to go up. Okay, so something like that. So up, a little correction down, we're likely going to go up again. Okay, so it's just little news articles like that to help you push forward. What else can I say about Discord? So again, this was by the World Economic Forum. It was a couple of weeks ago now, but the forecast for global growth over the next 5 years from now is at 3.1%, and that's the lowest it's been in decades. Okay, so that's an indication that your big indices or your currencies are likely to start slowing down very soon. So at the moment, 4.2% and likely to slow down to 3.1%. What else can I talk about here? So I think the Ask Me Anything bit is when I post these stories here, and I can post trades. You can ask me why I post them, and I can clear up your understanding a bit better by elaborating on what I see here. Okay, so that's going to be sort of one big package there for you guys. What else can I talk about here? Okay, oops, not worry about that. I might work a little bit backwards today. I will go on to Nuka's question he had about asset classes, what he would find, or what in our opinion is the best risk to reward to trade. Okay, so one important thing to understand with trading asset classes is that they're always changing. Okay, so at this point in time, we can understand that there's a lot of news going around at the moment about the US economy and how it's all not looking good, and interest rates are rising and things like that. Okay, so something very important to understand. If I look here, so this is 2-year treasury bonds with our interest rate, okay, going up. Once this guy hits 7-8% up here, that will be the end of the stock market. Okay, so would anyone like to tell me why that might be? So that'll be a big change in asset classes. Any ideas? Anything at all? No. Okay, so
double top.
yeah, so when interest rates are high up here, okay, you got to understand that if you are investing in the stock market or share market, people are dividend investors and they're likely to struggle to get 5% or so. So if you're getting 7 or 8% on a coupon every year by a government-backed security, people are not going to risk going into a stock or a business when they can have something backed by the government. So that will slow your stock market right up. Okay, so there's things like that you need to understand. Other things, there's a lot of geopolitical tensions at the moment. So that would mean at this point in time, your assets like gold and things like that are going to be doing quite well over the next years or so. Okay, so it's just little things like that that are going to help you out. So what I have here, something we can look at. There's a war in Russia and Ukraine. It has disrupted the supply of natural gas for many European countries. Okay. So Russia is the second biggest exporter of natural gas in the world, US being the largest one. And recently, the imports for America for natural gas has dropped. So now the exports are really ramping up out of America. Okay. So we come and look at our natural gas chart here. And we can see this huge big cycle coming down is likely finished down here. Okay. So we can have our double bottom here. And we can look for trend line breaks like this. Okay. Now, if we're considering an Elliott wave point of view, we can go to our labeling. We can say this is going to be a 1. This is a 2 down here. This is a 3 up here. So we're just doing a small retracement for a 4. And 5 is going to go above this guy here. At that point in time, this will be an impulsive wave, okay? And likely go above this moving average. So all this natural gas stuff could be a good idea to go long for some time until you see some positive outcome from the wars, or there's a big pipeline getting built from Russia to China at the moment. But I can't see that moving very fast if there's a war going on. So I'm happy to stay long on natural gas for some time. So this is why I like swing trading, so we can take an educated decision and we don't have to sit there staring at a computer all the time. Any questions? Okay. What else can we look at? So there was a question asked about what the US dollar basket is likely to do, okay? So in the United States, this is the unemployment rate, okay? So let's not take any notice of this big spike. We all know what happened here. But as we can see, unemployment was going down, 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 down in the US to 3.5%. And now unemployment is going up, 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 up. Now we're up to 3.9%, okay? So for about a year now, unemployment has been rising. Homelessness in America. Okay, we come down. Americans experience homelessness by year. So ever since 2016, homelessness is rising. So that's a sad thing to see. So this, to me, tells me maybe this is a recession or a depression that we're already in. Okay. Moving along to what President Biden has done to China. He's put tariffs and sanctions, increased pretty much a tax for Chinese goods coming into America. Okay. We come down. So this is all reputable stuff, all from the White House. So following in-depth reviews by the United States Trade Representative, American companies from China's unfair trade practice to encourage China to eliminate its unfair trade practices regarding technology, intellectual property and innovation, increased tariffs across strategic sectors such as steel, aluminum, semiconductors, electric vehicles, batteries, and all the rest of it. Okay, so that's their major partner, which China, from that, doing that to China, they're not going to see as much dollars coming into the US from doing that, okay? So it's not looking good for US dollars at the moment. So China is now selling record numbers of US bonds, okay? So getting rid of all their US debt. They've been doing this for quite a bit of time now, and that's not helping the demand for the actual dollar itself. Okay, so this is starting trends with other countries in the world as well. So they just sold 53 billion worth of US treasuries not long ago. Dumping US dollars, buying gold. China has been divesting for several years. And as you can see, their want for US dollars has been declining for quite some time. Okay, so less demand for the US dollar. So Japan, the second biggest one of US debt, also here, getting rid of their debt from America for the last 10 years or so. Okay, lowering demand for the US dollar. So China's yuan, US dollar, to become the most traded currency in Moscow. Okay, so they're showing really they don't need the US dollar that much anyway. So this comes back to your BRICS nations. So with all that news in mind here, it has made me label my dollar index chart as so. Okay. 1, 2, 3, 4. And we're going to have a fifth wave below this guy here. So if you are trading long against the US dollar, it's likely just going to be a counter trend type of trade, going from all the news and everything we've heard, plus the patterns we see in front of us, to make an educated guess that it's likely the US dollar is still going to fall for quite a bit of time so far. Okay, so we can draw a little trend line like this and try and pick up the most of these big cycles, these macroeconomic events. So again, 1, 2, 3, 4. We want to see our fifth wave come down below here. Okay. The Aussie dollar. So a long time ago, I posted this. Again, this is agreeing with the demand for US dollars not being wanted as much as what they used to be. So my labeling's a bit out now, but still we have a 1, a 2, started our minor waves up. 1, 2, 3, 4, 5. Okay, coming up to potentially all the way up here over time. 1, 2, 3, 4, 5. One, 2, starting a minor cycle. 1, 2, 3, 4, likely 5 above our 3 here. Okay. Apart from that, I don't really have too much more in case you guys have any questions so far.
That was brilliant analysis on the dollar index, Marty, and the news events. That was fantastic. So questions to Marty, please.
So,
Hey,
yep.
Marty, I've got a question.
Hello, Kim. Yep.
So Biden has frozen whatever 300 million or billion, whatever assets, US assets. Most of those are actually in Europe, and some of the big trading houses actually have more than that hosted in Russia. So in a tit for tat move, there's a potential that Russia will freeze any US assets they hold in retaliation for that. If they hold and freeze a big trading house, what will that impact likely be in the market, do you think?
Okay, so all that would sort of suggest to me is, again, show America that they don't really need to use their dollars as strongly. I think it's sort of accelerated a little bit more than that with Janet Yellen has made an appearance at China recently, telling them how to trade, how many exports they can do and all that. And it's sort of pretty laughable with someone telling someone what they can and can't do with how they export goods and that. So I don't know, it's just an unfolding story.
Oh, for sure. I just thought there might be a downstream effect on individuals and businesses that are part of that investment in Russia that they are holding. If that suddenly gets wiped out, there may be a further impact in the markets.
Yeah, absolutely. Absolutely. With that, there's a lot going on at the moment, but we're just focusing on the major macro things which are happening just right now. With the ripple effects, I would probably consider looking at your commodity areas a bit deeper. So Russia is like the commodity super warehouse of the rest of the world. They're huge exporters of not just natural gas, but lots of grains and commodities as well. So I'd probably look at those markets a bit to see if there's going to be more sanctions or trade restrictions done towards Russia if they withhold those assets which you're talking about.
Just on that, given that sanctions haven't worked even one pip in Russia's against Russia, why do you think they'd be adding more and more and more? It's just kind of a strange concept.
Yeah, over the history of empires and world-based currencies, sanctions have never worked any time in the known history of trading. They've always been a big
Agreed.
failure. So coming up, there is a interest rate announcement coming out for what is it, America on the 16th. Okay, so if you want to have a guess at what they're going to do, you come towards where is it? So they like to make their decisions based more on your 2-year treasury bonds. So I would think to draw these trend lines here. So if they make a decision to start cutting rates and you go through these trend lines, your interest rates could come down a little bit. Dear. So like possibly down here. Okay. And if they do and you have a home loan, it might be an idea to lock in low interest rates. Okay, so this is one big cycle down. Double bottom here. Likely an impulsive wave up. So this could be the start of interest rates rising for quite a long time. Okay. So keep your eyes on that one, the 16th of this month. You might get some good news. Okay, any finishing thoughts, Partha? Anything you'd like to add before we go today?
That was fantastic, brilliant, Marty, excellent. Especially the US Treasury 2 years trading at 4.8%, and the possibility of US dollar from different perspective, where they are quite eye openers. Yeah, so that's a fantastic fundamental analysis, brilliant. And we all can ask. You can all participate in the NP Financials Ask Me Anything, spearheaded by Marty channel on the Discord. You can actually take advantage of that. Many of us are either strong in something or weak in something, or probably I would not say weak, maybe uneducated or not educated, not enough educated in something. I always say I'm not at all educated in fundamental. I know a little bit of technical. I am not at all strong in fundamental. So any questions which are on fundamental side of it, I pass on to Marty because he's extremely strong. So if you have any, if your brain is also inclined to, like Kim asked wonderful questions to Marty, if you're also inclined to ask any question, because that's an open forum, that's an open challenge kind of thing. Ask me anything and I'll try. So you can do that, take part, participate in that. Ask me anything on that channel. Otherwise, I'll open this 2-hour session for the last 2 minutes. Open for all. Those of you who have not asked any questions. John, let us introduce you as the new member, John Moore. So if you have any question, because you have not asked any question. So any other one who are, Vijayta is from her chamber. She is doing extra physiotherapist duty on Sunday. She is in phone. Similarly, Shreya is taking this call from outside. Similarly, Dhanuka. So if you're having problem in asking questions to unmuting your mic, you can always participate by asking questions on your writing on the chat. So this last 90 seconds I dedicate to your questions, if any. If not, let us know. Then we will thank you all and then possibly conclude this masterclass for the month of June.
Thanks, Partha. Thanks, everyone.
Thanks, Kim.
Thank you, Kim.
Thanks, Partha. Thanks, everyone.
Thank you, Gautam.
Have a good one.
Thanks all.
Thank you.
Thank you, Dhanuka.
Thanks, Partha. Thanks, Marty. Thanks, everyone.
Thanks, Andrew. Thanks, Shreya.
Very good.
Fantastic.
Thank you, everybody.
Thanks,
See you
Tyler.
next time.
See you. Vijay says thanks, everyone.
All right.
All right. So since we are out of questions and we are concluding this session, and thank you all for taking time off in a Sunday and afternoon, and then participating and asking wonderful questions. Thank you all, and have a good trading week and month. Ben says have a great week, everyone.
Okay. Thanks all. Bye for now.
Thank you, and bye for now.
Thank you. Bye-bye.
Bye.